I need to have more contracts. So it's just something I was looking at on my stats. When you look at intra-trade P&L curves and you see that you're consistently giving back like 50% of your open unrealized P&L, that becomes an issue. So that's something I'm going to be working on. I just need to be able to take partials. That's really the issue, and I can't take partials if I have sloppy entries. Like there's no reason I need to be using a 50, 60 point stop. There's literally no reason other than I just need to refine it. So that'll be my focus for all of March, honestly. This opening is not too exciting to me. But if you guys notice, I did a couple different things with my charts. These small adjustments with the charts. Fucking Mari's profile picture. These couple of things I've done with the charts, so a little bit different. I have lines. Yeah. This is just so I can see increments, because what I'm going to essentially try to do is I realize that a lot of my trades, I'm getting too concerned with maximizing the points traveled on the trade when really I should maximize the points captured. So that's a big adjustment. It's something I've done in the past, but I'm gonna lean back into that just because, especially in this market, I've severely underperformed just based on the fact that like I have like princess standards for trading. It's so stupid. I need to be capturing upside. Like I round tripped some trade that was up 50 points to down 50 points yesterday, which that didn't make sense. So just looking at some of that shit. That'll be my focus all of March. So you'll get to see how I do that, make these adjustments. Because yeah, when you have one contract, you cannot take partials. And if you can't take partials, any trade that's up, if it doesn't hit your target, you make nothing. And I've had maybe 15, 20, 30 of those trades in the last 2 months. So yeah, that's the main focus. Alejandro said we got news at 10. So you got to kind of wait and see if there's anything that develops from there. I'm of the opinion that today might also be sloppy. You know, I need to look at the NVIDIA chart, kind of give you an idea of what's going on there. Yeah, NVIDIA, yeah, kind of just shit the bed, or not shit the bed, but just it's just destroying implied volatility. So with the earnings, yeah, earnings happens and it gaps up and kind of chops around. Anybody who try to swing that earnings with like calls or whatever, they're just getting melted. So those types of things can influence the market as well. Super important when those high beta names, when those have earnings, it can really impact the market, especially something like NVIDIA. NVIDIA represents a lot of tech in terms of weighting. I mean, all the daily charts are spacing out a little bit, so it's not the end of the world, right? It's not the end of the world. This is just a really poor location to get involved. There's just too much wicking on both sides. This is what fucked me up yesterday, so I'm not going to bother with it. I need to just lean back into what has worked well for me historically, and 100%, 100%. Use the 15 as your barometer. It's sideways, you know. You cannot definitively say which way it's going to sweep or wick. You know, it could stop you out. And it's just you're putting yourself in harm's way for really no reason. There's clearer trades. So with my new approach, or just kind of leaning back into what I've done before, I'm gonna need insanely refined structure, because I'm just not going to use a 65 point stop. I can use a 15 point stop. I can wait for something, find a continuation, get the tightest stop possible that, you know, obviously is valid, and then load that with 3 to 5 times as many contracts. So yeah, pretty much that's the game plan. give you guys a rundown. So if I have a 15-point stop, I can use 5 contracts, which obviously, about 150 bucks. And if you have like 25 to 35, points, you can use 3 contracts and use 2 to 3 contracts. Starting to break some of the local highs, but nothing definitive yet. We're still within priority range on all 3 indices. Let's see. ES looking relatively strong. ES just formed a nice bullish gap. It's going to confirm that in a second. So ES is the cleanest. I mean, it's definitely cleaner than NQ right now. And YM is actually moving pretty strong. YM's outperforming both so far this morning. Yeah, YM's breaking the local structure. So yeah, this one would be 150 to about 200. So my average stop is going to increase. My average stop, like dollar amount, I guess. My average stop dollar amount is going to increase, but the total number of contracts I'm going to trade is going to increase. This is going to be a filter that I use. So basically, if I cannot get positioned with the size that I need, I'm going to avoid the trade because I want to be taking profits. And the way I'm going to be taking profits, I'm doing the math on this. And based on the fact that I've had so many trades go into profit, at least marginally, and then, maybe they work, maybe they don't, I need to take them at increments. So I'm actually going to do something like this. 40, 50 plus. So all I need is 1 runner, right? That's typically what I've been doing. It's like I try to get 1 trade with 1 runner and I just let it run as far as it can and I let it break, try to break out a structure. Yeah, everything's back in the kind of rejection right now. But the stream looks good, right? Everything looks clear. You can kind of read this stuff. Awesome. Cool. So yeah, with that being said, this is a slightly different approach I'm taking. Essentially, my first target is going to be like 1R. I need to basically be able to get a bulk of my position off, even if the trade doesn't work, because I have too many trades that go into profit partially, especially in this market. So this is the approach I'm taking. I've done this. This is what I used to do for a long time. I just kind of steered away from it lately. And much to my disadvantage, honestly, because if I do the math on something like this, I can go back through all of my P&L curves of intra-trade movement, and I can see that they're up, right? It'll be up. I had a trade that was up I took some screenshots. It would be up like 500 bucks, and then somehow it would be closed at 230. And that uncaptured upside is really fucking me up because I do not have a lot of profits on books I don't have a lot of profit on the book for this year. So with that being said, I need to manage my positions better by taking off a bulk of my position between 10 points, 20 points, 30 points, 40 points. This right here will give me, you add it up, 50 plus 50, that's $200 right there. I risk 150 or 200 to make the 200 with 1 potential runner. So that's the approach I'm going to be taking right here. Mainly just based on the fact that I'm not realizing all the profit I can. So while doing this, the other thing is going to be an active trailing system, which is why obviously I have the ladder. So when I have the ladder, I'll be able to, bid right in a fair value gap or offer, my short position in a fair value gap. It tags me in. It starts moving in my favor, 10 points, boom, right? I can start to accumulate profits. So right now we're testing VWAP. We're testing VWAP on NQ. ES too. ES is also they're rolling over. So I think that might be in line with what Joey was saying with the tariffs not going away. So we might be trapped in this range one more day. I'm going to be pretty happy I'm not involved in a trade right now because it's nuking, which is melting down. But the active trailing system is going to be based on getting to break even really quick. I realize that I shouldn't ever be adding risk back onto a trade, and I've noticed a handful of times where I've done that. So as soon as I take risk off, I'm going to leave it off because I cannot afford to let trades reverse on me the way they have in especially February. So this is the approach. I'm assuming a majority of trades will get the first 3 and then maybe break even. And then like the majority of the bulk, like good trades, can probably get closer to this. With the active trailing system, I'm going to be monitoring for counter signals. If you saw my trade review yesterday, you saw that I said one of the reasons I got in a trade was a liquidity sweep. And then there was a sweep at the highs. So I should technically be monitoring that with the same level of, I should be applying that same metric. If it's a good reason for me to get a trade, why wouldn't it be a good reason for someone else to get in the trade opposite to me? So with an active trailing system, I'm going to be monitoring for counter signals. So meaning if we're here and we reject at a point of liquidity, I'm going to anticipate this potentially being, a reversal where I want to be trailed out at that prior bar low. So when you're thinking active trailing system, you're going to want to think this: prior bar low, except fair value gap. Like that's an obvious one. Don't put your stop in a fair value gap. But this is my approach. I've done this many times in the past, and what this is going to do is it's really just going to change essentially the game I'm playing, because I don't enjoy the game I'm playing right now. The game I'm playing of trying to catch a big move. I don't enjoy that. It's not working very well in this market, not for me. So my focus is now, how can I ensure that I make profit on a majority of the trades that I take? Because if I get in a trade and it goes up 30 points and then it stops me out in the red, who fucking cares? Like, how did that help me at all? So yeah, at the end of the day, trading is about making money, but it's also doing it in a way that's measurable and you can manage the risk. So those are my filters. I'm essentially not going to be entering a trade unless I can refine the risk down to, 15 to 30 points max. And if it's 30 points, I'm using 2 contracts. And, then it's like I had to adjust a little, but the ideal is going to be 15 point stop, which it's doable. You just have to be very, very, very particular. So a couple of ways that I'll accomplish that. Let's see, where are we at? You want to be looking at, you also want to, so for entry, you want to monitor. Geez, I can't spell. PD arrays. Then filter for PA, for price action. So you don't want to just necessarily buy a fair value gap because it's a fair value gap. Here, back to midnight. So if you guys were in the stream, I drew that one out for a reason. If you look at where we're at, I didn't really like this. So this right here, I figured we might trade back down to this. Looks like we were touching it exactly. This is a broad down candle in the 15. The SMG. Yes, index. Wow, why I'm still holding higher. Interesting enough. So, But yeah, when I say monitoring PD arrays, so you want to be looking at the fair value gaps. But one thing you could be doing is watching the reaction there, right? Like watching the reaction. So for instance, here's a real example for using price. If we're looking at this, this 36.45 is a change in state. You see that it closes below, right? But I don't want to necessarily buy 34. I can just set my order right here for 46.25. Right? And then instead of buying at this price, I'm already taking one off. So I will be making $100 right there because, well, I would do I'd make it 11 points, like 21 points there. I would do the extra one for the commissions. But the idea is across the 5 accounts, as soon as it moves 10 fucking points, which is inconsequential, it will almost always move 10 points. I'm guaranteed $100, which is reducing my overall risk output. And as that starts to move 20, 30, I'm trailing this thing to break even. I don't need to ever widen my stop. And for whatever reason, that's been a bad habit I've had lately. Like I will give it more room when I need to strangle this fucking chart because it's been doing the same to me. I need to tighten my risk. I don't need to open it up. I need to be prior bar low, prior bar low, prior bar low, prior bar low, trailed out. That's the reality of this. I've been doing it inefficiently. And my intra trade, there's something on TradeZella you can look at to see if this is something that applies to you. It's called your running P&L. So you just go on TradeZella and you type in, you just go where the charts are, and underneath it says like more charts. And there's one that says running P&L. So it'll tell you what your P&L is during a trade. Yeah, V-shaped recovery. Yeah. That's why I'm not touching this shit today. But let's see. See that? It starts slightly red, goes well into the green, and then goes just as much into the red. That's called being stupid. So there's no reason for that. There's literally no reason for that. That's called a waste of a trade. So because of that, that's why I'm implementing this system that I'm talking about. And it's not just one. I've looked at like, I don't know, 40 or 50 trades that I can see my realized P&L being less than my peak. So there's a few stats that I'll look at on TradeZella. I'll kind of explain some of that today, but yeah, those are the adjustments I'm making because I'm just sick and tired of this shit, honestly. I'm tired of having my trades be up a little bit and then making nothing because like, what's the point? And honestly, from a psychological standpoint, it's extremely exhausting because if you're not getting any sort of like pump or any sort of boost in your equity curve, it's just every single time it's just like getting hit in the head with a bat. So the idea is we need to secure more money per trade. So that means tighter risk parameters. Instead of using 2 contracts with a 46-point sloppy stop loss, I can refine that stop very tight because that's something that I'm decent with. Use the DOM, get my orders in there, and then I can take off I can essentially secure 50 points relatively easy based on the reaction to our array. The reason we like fair value gaps is the shit bounces there. Why not secure an immediate $500 on each day, like with all the accounts, $100 each? Like, why not do that? I have the skill set to. It's a reasonable thing. So with that being said, that's the approach I'm taking. As far as today, there's nothing at all that I would have wanted to trade. I'm doing a no trade day today, but I'll be back tomorrow for it. And then really just start to get this system dialed in. So I'll be extremely, extremely picky about the entries I take. I will refine it to whatever time frame I need to. One thing you can do also, one thing you can do that would be really good if you do something like this. Let's say like you see price and it creates a fair value gap and you want to enter, but you don't know if you want to enter immediately. You can wait for it to go in. Then you could set your limit order, and as it reacts, then you get your entry as it starts to push through because your entry will be here at the bottom and you put your stop right under that, above that swing point. You do that. You can also put it at the consequent encroachment. So there's a lot of ways to refine your stop loss, but one of the things, it was just that quote that MC put in the chat. He says it's never really the entry price that matters all that much, but rather the position sizing. And when I read that completely opposite to what most people did. Like, I guarantee it, because I realized I'm like, fuck, the fact that I do not have a large position size or even a scalable position size per account is hindering the fuck out of me. And most people read that because they're like, oh, you could just buy wherever. And it's like, for me, it's been a huge disadvantage to only have 1 lot per account because I can't do anything with that. I can't scale out. I can't, I can trail, but it's like I'm not getting, I need to ensure that I'm selling into the peaks, I sell into a push. I want to be exiting here. I don't want to be exiting on the retracements or when it comes all the way back and exit break even. I did this like $700-800 on a trade. It's like, what the fuck am I doing? So that's the approach that I'm going to be taking. And it could work for you. It's definitely you have to be a lot more precise. You have to be a lot quicker. So it's not necessarily the type of system for everybody, but I'm just sharing it because that's what I'm going to be implementing. This is something I've done for years, like I was saying. So if you guys are not familiar, it'll be cool for you because you'll get to see the order book or the DOM. You get to see the ladder in action. But essentially, you're looking for an area where price might retrace. So the DOM's really good if you want to look for a turtle soup entry and a continuation of a trend. You just put your order right below or above a swing, get tagged in, have that immediate reaction, boom, you secure the 30 points, if you will. And then you potentially have the opportunity to ride a 1 or 2 runner. So that's what I need. I don't need to focus on the 1 or 2 runners. I need to focus on the base hits because if I don't have tighter stops, I can't use more size. And if I don't have a mechanical system for ensuring that I'm getting a baseline level of profitability per session, then it's going to be extremely hard to continue doing this in this market. So we call it using your data. If it was true that I was securing a lot of the open positions or open profits I had, then I wouldn't adjust it. But that's the premise. How you doing? What's good? What's good? Yeah, for sure. I think it's going lower. I'm just chilling today. I'm exhausted. We focus on tomorrow. Focus on tomorrow or next week even. I don't really care. I'm gonna wait for clearer structure so I can go over and kind of follow that plan I was talking about. Yeah, see, just knifing lower. So yeah, if you guys want to do something similar, you're more than welcome to. It's just I look at my stats. I was able to look at a different metric, and it's like I need to secure some fucking profit. So I need to get tighter stops so I can have more size where it makes sense. Stop being fucking sloppy. Honestly, just go back to what's worked for me. So shit that's worked for me in the past. I'm gonna focus on that. It's like literally the only thing we can control is entry price and position size. So it's like if you have shitty entries and you don't have a lot of position size, then you have no ability to partial your profits or anything of this nature. So there you go, basic power 3 so far. Above midnight open, drew out midnight open for you guys, obviously. I didn't draw, you notice I didn't draw anything else. So midnight open is a level. So whenever you move above midnight open like this, it's likely a wick. So I'm not like, oh my God, I need to buy this right here. It's like, it's such a stupid trade. It's more than likely going to trade lower on you. So my system will be really, really, really based on 2 things. It's going to be either the early reversal or the continuation. So like this entry right here to target these. So I can either use a fair value gap right here, or I can use obviously a change in state, put the order on the retest so it gets it exactly 10 points, 20 points, 30 points, 40 points, and then runner. That'll be the approach. So I really need to just stick to those 2 things. It's either you catch the reversal or the continuation. And you do not go counter trend. So if I do those 3 things that I'm talking about, be chill. So minor adjustments, not reinventing the wheel or anything. But yeah, that way I'm securing at least $500 a day. Yeah, not a bad move. Yeah, look at the daily. The daily's now, it's not sweeping Asia low, it's breaking prior day low. That's how it should be thought about, in my opinion. Everything's weak. You go look at Solana, go look at Ethereum, everything, Bitcoin's at 85,000 now. Everything's weak. You know, let's look at the dailies for indices. YM's holding up. ES is still in the range. NQ is below prior day low. It's approaching low of week. Nvidia is just fading the earnings move. Not unexpected. Yeah, it's not unexpected. I think everybody needed this to move higher, so it wasn't going to move higher. It's like, I feel like this was a pretty easy read. It's like, you know, you see it at the highs, you would hope it breaks, but when there's not a lot of confluence there, you know, the fact that we're trading far above midnight open, it's really hard to be like, yeah, it needs to go above. It's like, it's close, but what has been the fucking... Yeah, it's just, don't worry, it just keeps sounding off like crazy. It's all good. I'll come in tomorrow, get the TGIF. Trade one fucking day this week. One decent day. Yeah, I mean, if it runs, I mean, we're almost at the fucking, those swing lows on the daily, or the weekly, I mean. Like yeah, just puking. So strong, yeah, keep telling you. Yep. Yes, sir. Yeah, I know. Literally, that fucking photo you sent. I was just thinking about that shit like all day. So yeah, let's approach this new setup. It's really what I've done for a while. It will get me daily profits instead of worrying about having some fucking, you know, I don't need some crazy ass fucking move just to come back and stop me out of break even. It's like, that's such a waste of my fucking time. I need to secure the bag, which has just not been the case this year. It's been a different market for me, so I'll adjust. And this is where you get the heroes trying to buy it. It's like, it's fucking, look at the hourly, look at the 15, look at the 5 minute, just heavy. You might get a bounce, but it's just, it is substantially easier just to catch that continuation move. It was substantially easier to catch the continuation move. So yeah, NVIDIA at the 200-day moving average again. NVIDIA is really just fucking accelerating this bleed. Gapped up after earnings and just shit the bed, and now it's below prior day low. See what we look like across the board. It's weakness, yeah. Okay. Amazon, let's see. Okay, Amazon, yeah, weak. What's Apple looking like? It's about to be one of the heaviest weeks in a while. Yeah, crazy. Thanks, Trump. There's Jita. There's Jita. Yeah. Yeah. Take care, Mike. Safe travels. Enjoy Vegas, my man. Climb some rocks. So have fun. Vegas is cool. But here's how I would go about this. So if I'm looking at like a change in state, right? You can take it on the retest. 34 point stop, 2 contracts, maybe do 25 and 50 points because volatility is expanding. But, you know, you're taking a profit. Let's see. Damn, this is fucking crazy stretched. The idea is instead of me like getting a shitty entry at 72, I can really just set my order at 92. Let's see, what's this? Whatever this price is exactly, 92.75. So if I set it at 92.75, I get filled right here. And from 92.75, 82.75 would be the first one. So, 72.75 with a 33 point stop. Yeah, you can use like 3. So if you get one off at like 15 and 30, that would give you 45 points, which is about 100 per account. So yeah, with 3, you do 15, 30, and then 50 or 100 or whatever. So that way you're getting a bulk of it off like immediately. It's an immediate reaction type of thing. Because that way I'm able to build a bigger buffer and then, start increasing the daily risk and doing all that shit. But right now it's been chop, chop, chop for me. So this right here, like legitimately this shit right here will build such a baseline amount of profits that I can eventually have like 7 or 8 contracts, and it could be 10, 20, 30, 40, 50, and then have like 3 runners. Because right now I'm just trying to do the 3 fucking runners, and I'm missing out on the bulk of the profit that can be made here. Like I'm missing out on so much fucking profit that can be made right here. Every day $1,000, every day $500 minimum with this type of thing. Once you get to like 8 or 9 or 10 contracts, you can legitimately make like 1,200 and still have room for runners. So, you just do the math on it, whatever, call it whatever you want. It makes sense. It makes sense. You can argue, like, I was like, oh, but from a risk reward standpoint, it's like, no, if you have your entry super tight, the profits happen so quickly that the dynamic risk is changing so fast that you're not risking. I mean, this is just $200 or whatever. So for now, I'm gonna put the daily stop at 222 and pretty much keep it around 150 per trade, 200 per trade, and go from there. Because this will immediately put you into profit. And then from there, it's like, once you hit profit target 2, 1, 2, or whatever, you're trailing prior bar low, prior bar low, prior bar low, prior bar low, prior bar low. That's active management. Instead of letting this thing come back and stop me out at fucking negative again. Because I think yesterday I needed to do that because I didn't realize how often I was doing that until yesterday happened. Yesterday being up $200 on an account and then being down 200 on the same fucking trade. 15 minutes later, it's like stupid. It's a waste of my time. So, you guys you could track your own data. You do all that stuff, but it's the lessons gleaned from the data, right? See what does it actually mean to you? How can you actually apply this to get better? If you're not actively trying to refine your system with the data, you might as well go collect stamps. You don't just collect these trades because they're like Pokemon. You collect the data because it's going to help you. So you always be looking at different metrics, always be looking at different points of view. Let's see, right now we're down below prior low of week, right? Right now we're below low of week. 5 minute and 15 are somewhat bouncing. This is maybe your first initial inversion. But even this, like I look at this now and it's like, let's see, where are we at? 55 points. Yeah, it's a big stop right here. But I mean, realistically, probably right there is possible. But again, do you really need to be a hero catching knives? Do you really need to be a hero? I think this is a good example because with this short, what is the criteria for a continuation? You look at the opposite candle. The opposing candle is the order block, right? If you want to sound like a fucking genius. So an opposite candle, that's what you're basing your risk on. That's the whole point of an order block. It's the whole point. There's nothing more to it. It's a market structure. It's the lower lows. It's the continuation. It's the risk point. This is a swing formation. You just use the body to tighten it a little. That's the magic of it. So it doesn't benefit us to buy down here when we know we can use this right here as the risk point. We don't need to fuck up and be sloppy and waste 10 points when we can actually enter 10 points higher and profit by the time we'd get in. We'd be selling it to our past selves instead of buying it, So it's just being a little tighter with the shit. I've been way too sloppy with it lately. So the DOM will make it a little easier. Focus on high probability continuations. Yeah, that's just adjusting with market conditions, adjusting with your data, right? Like if you guys are struggling, fucking track your data. What you want to guess? If you're doing good, who cares, right? But if you don't know what you're doing wrong, look at your fucking data. Damn. NQ, low of week. YM still in the daily range. ES, prior day low sweep. Might hold it, might not. Crazy move. Crazy move. Solid, clean price delivery. If you lean into the model, lean into the rules, you'll be fine. Market structure shift, right? What do we see? We saw it swept out an internal high. Let's see. I don't think there was an SMT really with the 15, but we did sweep out this data high, which if we're being honest, this is a model in itself, right? You sweep out the data high. Now, which data is this? This is NVIDIA earnings. That's significant. That's a big part of this market. Sweeps out the data high, gives you a market structure shift right here. Here, boom, boom. That's your market structure shift. You see it like right here, basically 60, yeah, right here. Then what do you look for? You look for some sort of continuation. Do you think this immediately needs to hold? The one thing I need to do is I would not expect to short this. So of course I'm going to long this. Of course I'm going to long this. That is such an obvious thing. If you don't know how to see a short, flip the chart. It's relatively similar. The dynamics of shorting are a little more extreme, but they tend to move faster. But market structure is going to be the same. There's only two directions, up and down. So with that being said, you look at this. Why on earth would you ever try to buy this? Or I'm sorry, short this right here? Like if it was a flip chart. No, you get long 10 times out of 10 times. So you'll see me doing a lot of this. Flip, 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 flip. Just because I have such a strong inclination to see one side based on just my years of experience trading options. So I had to, train my eyes to see it a little different. Because like Mike said, it really don't matter which way you go. It's just about making money. Up or down, who fucking cares? Who fucking cares? Why does it need to go to that price? How many times do we see a level where damn, that's a good level and it doesn't go there? What? So wow, you sound so, you feel so smart, but it's did you make money on it? And I had to look at it and it's bro, I've been missing out on so many unrealized profits that it's wasting my time. I could have done nothing this month and it would have been a better use of my time. So yeah, you got to secure the cash flow. That's what trading's about. But the only way that a lot of you can do it with the prop firms or small accounts, you have to have tight risk management. You can't just throw 5 lots on. It's just not going to work in your favor. You're going to get wicked out when really you could be wicking into profit. You know, get a better entry, wicks you into profit, wicks you into profit. Sorry, I gave you a little bit of reversal, 5 minute, 15 reversal candle, if you will. It's like, yeah, you enter here, and by the time you get here, it's like you've taken a few partials and had a runner. Like, whether or not you want to take the trade, it's partial, 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 1, 2, 3, 10, 20, 30. So if you entered at, what is this? At 10, you're already out 2 partials.
Order filled.
Or I'm sorry, 3 partials, 10, 20, 30. So the next one will be at 40 right here, yeah. 1, 2, 3, boom, and then you have your runner for this. For like right here. And by then, it's like break even on the stop. So you take this fucker, break even. And then instead, right now, since you would have 10, 20, 30, you know, you let one run for maybe 100 points. And that's your $200 for that account, plus the other 200 you just made on the 10, 20, 30. 30, 30, 60, 100. So yeah, you made like $320 right here off this very, 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 very basic trade. You waited, you saw an inversion, you saw a higher low market structure shift, fair value gap created, and then you observe this breaker as well, or mitigation block, if you will. So that's your entry right there, the 09, 10 basically, and you just took 1, 2, 3, 30 point stop, and you're break even on this fucking thing. You don't move your stop. Once this candle closes and then breaks above, then you move your stop up one, right? So you wait, see if it's gonna break. Is it gonna break the high? Your stop's break even. This thing's gonna break the high. It's probably go midnight open. So extremely obvious counter trend trade. It's a mean reversion play. So you have VWAP at like 21,200. Sorry, I was like having a stroke right there. 21,200 area, midnight open just below that. So if we get a close above this candle right here, that's what you'd be watching for. Your stop is currently right there, like if this is what you're looking at. So you just stay here, break even. You already secure profit, so by having a mathematical break even, you're fine. You just hockey it. And for me, it's shift, then a little sideways line, pink. Break even. And then you just would let it work for this. And if it stops you out, so what? You just secured 10, 20, 30. So 60 points. Not bad. Got an inside bar. So your stop's here. You wait to see if it's going to break this high or is it going to break that low and revert. Look at the 15-minute closure. Looks strong. It formed a bottom wick right there on the 15-minute. 5-minute, same thing. You got inversion on the 5-minute. If you want to look at it. See, we're closing above the inversion right here. So as soon as you break above here, your stop goes right there, under 35. Mind you, if you're doing the same thing that I'm going to be doing, you have to be extremely fucking quick with all this stuff. So if you want to take your time, definitely don't try to Try to be putting size on having, because you're gonna have to be on the ladder doing it real quick. You have to see a fair value get set up, a fair value gap set up, hit your set your limit, right? And then start filling out your offers. Yeah, just cash flow, right? So you see it's starting to consolidate right here. Your stops break even. As soon as this high gets broken, not equal highs, see, boom, then you're gonna take your stops right here now. And you have a target right here, essentially. So 110 points. You could also extend it here, 162 points, but we're gonna do just easy base hits right here, 110 points. As soon as this candle closes above the previous candle high, we're gonna trail the stop one more candle as well. And if it reverts here, then so be it. But you know, obviously there's no bottom wick, so I might create a bottom wick. We're in a 5 minute, yeah, we're in a 5 minute fair value gap, obviously right here. You can see it on the chart to my left. 3 seconds on the candle closure, 3 minutes on the 5 minute closure. You don't want to see this break higher. We did create a bottom wick to some small extent. Go ahead and just do this a little wider. But you saw we had multiple confluences, right? We had very quick profits taken to ensure that we'd be profitable on the trade. And now you're starting to see it move above here. Once it breaks above, you know, this high right here, you do two things. Number one, you can take your profit at 119.50, or you can ride for 171.25. Those are your two options in this type of trade. Mean reversion, multiple confluences, inversion, plus market structure shift, model 2022, if you will. Remember the stop's this one. Stop's guaranteed 26 points. So entry 11, stop 35. Yeah, a little less than that. So you just wait. See, is the 5 minute gonna close? Because how many times you catch a move like this and then you don't secure anything? It's just a waste of your time. Obviously the numbers look a little silly because it's pretty compressed, but I mean, this is a big move. Bigger than what we get most days. So once we get a closure above here, then this stop can get raised to right here. See how there's a criteria behind the management? Realistically, I feel like this is going to hit midnight open, but for the example being explained, 119.50 is more than enough. That gives you 110 points. So you see how it's 20 seconds and we're starting to get above there? You know, you could potentially start moving into like the body open, right? Start to just creep it. And then once you get a candle closure in 10 seconds, then you can trail it as it starts to continue above. You just do not want to be in the area where it could get wicked and then still close higher. See, now it's going to be this candle right here. You want to see it close above? I would have it at 44. See, it's forming a bottom wick right here. Boom, boom. We're inside this fair value gap right here, which is a 5 minute. Cool thing is, you've already secured like 200 bucks at this point per account with really like nothing, like not a big move, like really not a big move. Seven seconds, see how it's starting to push towards the highs. You'd expect this next candle to close above. So I'd be on the stop expecting to move it to, what is this, 53.75. So from 44 to 53. So another almost 10 points. So like 86. And then right here, you could potentially be waiting for it to flip, or you could say any sort of hesitancy, I actually do want to move it. So this is an option too. See, it's starting to flip right here. There you go. It's a little bit better. Ideally, this gets the close above here in the next 1 or 2 candles. This is just, you know, tape reading. This is tape reading. It's exactly how I would trade it. That's exactly how I manage it. There's a reason why I'm fluid with this type of stuff, because I've traded extremely tight management systems in the past, and they work well because you secure a lot of the move. Yeah, 200 times 5. It also gets you all your payout requirements too, Alejandro, for Top Step. So that's another benefit to it. Yeah. And the idea is you can have an insanely high hit rate with this type of thing, because you can take, think 1-2 partials and you break even. If you made 30 points, then you break even. That's not a bad day. So you see it starting to flirt with this, the lower end of this. It obviously needs to hold the 5-minute gap. Otherwise, it's going to trade lower. It'll easily trade here and probably down back to here. So that's why it's good to be tighter with the trails and these types, especially these types of trades. You know, this is just a reaction to the weekly low. And let's see. This would be your trail right here, 53.75. All in all, this would be a phenomenal trade for something that didn't really do too much. You know, even if it stops, it's a great setup. This is something that's extremely repeatable, extremely fucking repeatable. What'd you do? Waited for a market structure shift, waited for a fair value gap. Now right here, boom, trail again. With that strong close, obviously trailing that. Easy. It comes back, you want to be out. So see, this is the target one that we said. This would be where we take it, but I fully believe that it'll go here. So see that push, then you're moving up, boom, right there if you're still in the trade. But for the example that I would be taking, I am personally out right here, but I do believe it is extremely, extremely likely that it trades to this 170, 125, as well as the VWAP that's slightly above it. Like it's extremely clear that that was the case. So I've been saying the whole time, but for what you're trying to do here, 110 points plus, you know, the 50 or whatever you secured here through the partials, that's a good day. That's $300 per account. Easy. Easy. Instead of just having one contract and wondering if you're going to end up stopped out, you secure money along the way. So this is what I'm going to be doing. You guys are more than welcome to do whatever you want, but this is what I'm doing because I'm beyond tired of trying to catch the biggest moves. I don't fucking care anymore. I'd rather catch fucking money in my pocket. You know what I mean? I'd rather catch money in my pocket. So yeah, I feel like extremely simple structure, laid it out for you entirely. Yeah, very, very, very clear. There's your midnight open. It's coming back. Very obvious setup. This is going to set up for an amazing tomorrow. I'm going to be in there hitting that. So, hope you guys learned something. This is this is bread and butter, right? 171.25 is like right there. So you had 2 potential trade opportunities. This is the, what was that, previous day low? This level right here.
Order filled.
Yeah, this is previous day low. And your 171.25. So you had another potential, obviously, like we were saying, 40 points of upside or whatever.